Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 7th of May. Starting off with the FTSE 100, which is still near the highs, in with the geopolitical time wasting that's going on at the moment. But the risk is that we fail near yesterday's, or we failed at yesterday's high, at least for the near term, towards 86.50, and we've got the risk of a test of the 50-day line and the old range floor pre the tariffs just below 8,500. RSI is at 58. I'm slightly wary of that, given the way that we have an RSI failure in the 50s. That can lead to a rather painful drop for a stock or a market. So we're just keeping an eye on that. Ideally, we stay above 85.50 today. Moving along to the DAX, and here was a market that I think couldn't believe it was back at the highs and decided to take action at least yesterday, but actually still very near to the highs, 23,500 or so. The top of the channel there from back in March last year as high as 24,300, and that's what we're looking for as the best case scenario target over the course of May, while we're above the top of the latest gap, 22,700. RSI at 65, so in a decent place, so not overbought, even after the massive rebound that we've seen over the last few weeks. The Dow is next, and here looks rather more precarious than the DAX. We've got a situation here where we basically had a bull trap through the 50-day moving average, 41,000, let's call it 200, and below that we've got the risk of a test of the old November support line projection towards 40,300, but hoping we're not getting anything worse than that, especially given the way that the RSI is still above neutral 50 at 52. I suppose the other point to note here is the way that we've got that line of resistance from the end of February, and that's really pressuring this market at the moment. If I can delete the correct line and impose the resistance line there like that. So that really is quite a factor there. And if you're cautious, you'll probably be waiting for that line to be broken, 41,400, before assuming any further gains for the Dow. Moving along to Bitcoin, where it's been slightly disappointing that we're not already back over the 100,000 level, currently at 97,000, so recovered quite well after the bull trap through the top of the range there, 96,000, and hopefully this is the time when we're going to get through 100,000 and potentially get up to as high as 120,000 by the end of next month. Was previously looking for 120,000 by the end of this month, but maybe the market could do it. It's perfectly capable of doing it, but just being a bit more conservative, given that we've had a week or two of inertia in this market. Next up is gold, and here I think a lot of people thought it was all over for the gold bull run, but all that really happened was there was a bear trap rebound from below the 3260 level. We went down towards the 3200 level and then bounced back quite sharply. Just have to adjust the rising trend channel there, or the floor of it, a little bit, but in fact the destination still towards 3,800. I suppose we're looking at that for that realistically by the end of next month. It could have been the case we're looking for it by the end of this month, but that's still a pretty decent target while we're above 3,200. Moving on to the stocks and a few esoteric picks here. The first one is Blue Star, where the reason for picking it is that we have a rising 200-day line near the low. We started the rally off with a gap close buy signal, but obviously that faded away. We've had an unfilled gap to the downside, but it's interesting now that we could be in a rising trend channel base and above recent support around 4.7 pence. Top of the range around 12 or 13 pence. Could be on its way, especially if Bitcoin in the crypto area starts to enliven itself. Moving on to another stock, or another company which has exposure to the crypto space, and that's Coinsilium. What's of interest here is that not only the shares have bounced up a bit, but we had a gap through the 50-day line, which is one of our favored signals, and also now after a few days we've got both the 50 and 200-day lines rising. RSI is above neutral 50, so it looks as though we're going to a golden cross, hopefully later this month, and the top of the range, the top of the channel there, towards 5.5 pence, which I suppose we're lucky would be an end of May target, but maybe allowing for the end of June is a conservative thing to do. Upside value while we're above the 50-day line at just under 3 pence. Next up is a stock which I think I'm the only person in the world who actually looks at this on a regular basis, Crism. And here you can see that my worship of the stock has so far done well. What we've had, though, is a pullback just above the old resistance area. That was around the 13 pence area. Above that, looking for a retest of the latest spike, which was up towards the 30 pence area. Best case, 34 pence by the end of next month. The other point to note is that both the 50 and 200 day lines are rising, so we're going to golden cross, which is typically the strongest part in the cycle. The other point to note is that the RSI has remained above neutral 50 on the latest pullback, and that tends to also be a sign of a very strong market. Moving on to Gfinity, which I shied away from when the AI transformation news came up, because I was fearing there would be a fundraise, and obviously there was a fundraise. What's interesting now, though, is that with the fundraise at 0.07 pence, the shares are actually trading up. Normally when you had a fundraise and the shares trade up, it's a very strong signal. It's obviously a logical, strong signal. Looking for 0.13, 0.14 as the target later this month, while we remain above the 0.06 area, which has been recent support. Moving along to, and don't forget actually the RSI 50 rebound, which is also helping the situation. Moving along to the next contender, which is Kazera, which I think has just been on the receiving end of $11.9 billion, which I suppose the market was anticipating. You see the rising trend channel there since April last year. Top of the channel here, 2.5 pence, which we're looking for by the end of next month, while we remain above the rising 50-day line there at 1.6 pence, and another RSI 50 rebound situation. In fact, two there in the recent past, which is a potential leading indicator on the upside. I looked at Northamber for a few days ago for the first time in a long time. Initial target here was 32 pence, which has nearly been hit. Next level up, which is rather ambitious, is up to as high as 45 pence by the end of next month. 50-day moving average rising there near the lows, and we've broken comprehensively recent neckline resistance, and also had a gap close buy signal above or through 29 pence. Above 29 pence, really looking for the shares to get into the low 40s by the end of next month. Onto a stock which had a little flurry a week or two ago. It's back again. Was a bit scared of Physiomics, but here we've got a situation where shares have regrouped with a higher low, and above the 50-day line they're at 0.43, so it's rather simply looking for a retest of 0.54. Last month's resistance. Best case here would be for the shares to fill the gap up to 0.8 pence, but difficult at the moment to see what would do that apart from a wonderfully accurate charting call. Moving along to Seeing Machines, which I tend to try to avoid normally, so here's a special treat. Here you can see a sort of a U-shaped turnaround. End of day close above the 50-day line. We could be on the way to filling that gap there up to 3.8 pence by the end of next month, or hopefully a bit sooner than that. Ideally, we stay on the right side of recent broken resistance at 2 pence. On to Surface Transforms, which I think I tweeted out during the opening hours of the market yesterday. Here you can see the shares have followed through and hit the initial target there at 0.62. Next target there is actually a rather ambitious one, which hopefully I can try and get on the chart, and that is up towards the 1.8 pence area, basically for the shares to fill the gap up to 1.45 pence and beyond. Ideally, we stay above the broken initial 2025 resistance at 0.53 on an end of day close basis. But you see plenty of blue candles there. It's either blue or flat, and we started off here with a gap close buy signal at the low at 0.27. So that is a very interesting technical setup there. Moving on to a new entrant for the market, and obviously the stock market needs all its help, all the help it can get and all the encouragement it can get. So the last thing it needs is for people to poo-poo a new stock coming to market. Obviously, so far it's been a good start for the smarter web, and yesterday looked at the chart here. Was looking for a best case scenario target up to 32 pence. That might have to wait, but at least while there's no end of day close back below yesterday's peak at 16 pence, we should be on our way towards 32 pence over the course of the rest of this month. But let's see if we can stay above that 16 pence level on an end-of-day close basis, as I've said. Moving along to Vast, and here, you heard it here first with the CEO buying at 0.1 pence. We're now, 4x, 5x above that. We're just playing with the recent target at 0.47, end-of-day close above 0.47. Looking for a best-case scenario target, diamonds included, of 0.7 pence. Hopefully as soon as the end of this month. Ideally, there's no end-of-day close back below today's gap floor at 0.42 pence. On to the last two. The first one is Wishbone. And here, the stock really behaving itself with its new incarnation. Absolutely different beast, different animal. Initial target here was 0.21. Second target here, 0.31 at that the upper parallel of that rising trend channel base, and basically where the 200-day moving average is at the moment. We haven't been above the 200-day line since basically the end of 2022, so it's quite a long time for the shares or the company in the wilderness, but looking very decent indeed, especially if we can get that gap fill towards 0.29. Finishing off with Zenith Energy, which has been one of the better performers this year. Here you can see that although we're trying to work out where the floor of that rising trend channel is, still got a lot of resistance with the post-January price action there. So basically looking for the shares to break 8 3/4. If they can do that, then the top of the channel there towards the upper teens could be on its way by the end of next month. But the key here is to stay above, at or above the 50-day line there at just under 8 pence. The other point to note is that we've just had an RSI 50 rebound, so hopefully this is the low of the move. That's it for me today. More updates tomorrow.